You're ready, I'm ready. Thank you. Good evening. I'd like to call our tax levy meeting to order tonight. Noting that all board members except Dawn Hendrick is here, as well as Allie Dye, Steve Summers, and Dr. Brown. Oh, and Brian is back there. Hello, Brian. Welcome. First, I need approval of the agenda.
Motion to approve.
Second.
All in favor say aye.
Aye.
Thank you. I've received no public comments for this meeting. Allie has not. She's shaking her head. So we will dive right into the budget approval and tax levy approval. Allie.
Thank you. I'll have Rebecca pull up the presentation. Okay. Now the clicker's not going to work.
Mark, if you move over one, that will be helpful.
Maybe I should have kept the keyboard, Rebecca. All right.
You need batteries there too?
Okay, so on the first slide we show you the third draft of the budget that was approved in July, just to show you what the tax levy breakdown was at that point in time, and then also total expenditures at that point in time. Some items that have changed since the third draft of the budget that have been updated for the final draft includes student count from the third Friday in September. We had estimated 4412 and the actual was 4411. We have our summer school enrollment. We also have our open enrollment in and out students that were verified during September student count. We received our October 15th equalization aid certification, which was $24.6 million. And then our October 1st equalized property values came in at just over $5 billion. The tax rate is $8.90. And then we also have the final revenue limit worksheet items, which includes transfer of service, other exemptions, and then we also have fund balance allocations that include carryover. So some of the items that have changed for Fund 10 revenues are open enrollment, state equalization aid, property tax levy, grant allocations, including carryover. I will just note that we didn't get all carryover amounts from DPI, so only a few had the actual carryover calculated. We have building and department fees, state transportation aid, Medicaid, state categorical aid. Aidable refund was updated. Act 12 is new this year, so that's in there for Fund 10 revenues. We also updated premium, personal property aid and computer aid, HILT payments or payments in lieu of taxes, and then tuition payments for this year. Fund 10 expenses that have been updated include grant allocations, building student count allocations. So after the third Friday student count, we update each building's allocation based on their students for this fall. We also have updated building department fees, the 4K student count allocation. We also updated district-wide expenditures, which includes private school voucher payments and an open enrollment out payments. The transfer to Fund 27, salary and benefit accounts have been updated based on our October actual staffing, so actual numbers from payrolls. And then our transportation budget, we moved some of the funds from the district-wide budget to the athletics transportation budget. And then, the wellness clinic was also updated. For Fund 27, we updated the transfer from Fund 10, state categorical aid, grant allocations, Medicaid, high cost aid, which was new last year, so we have that in the budget for this year. And then we also updated expenditures for grant allocations and salary and benefits that also have actual October staffing. Fund 39, we increased interest earnings and our rebates. In Fund 73, we updated our budget to reflect the 23-24 retirees. And in Fund 80, we increased Warrior media and communication budgets and then also increased the tax levy this year. In board book, there was the fourth draft of the budget provided to you, as well as the budget adoption format that we are required to provide from DPI. This is a comparison of total expenditures from July, which was the third draft, to now for the final draft of the budget. And new information for the tax levy approval. In August, we received the estimate of net new construction, which came in at 3.49%. The equalized property values came in at just over $5 billion, which was an 8.3% increase. The finalization of the 24-25 revenue limit worksheet, which helps determine the Fund 10 property tax levy. The state budget increased the school property tax levy credits again this year. Waunakee is estimated to get another $900,000 for that. We had an increase in the Fund 80 tax levy, and the final tax rate came out to be $8.90. This shows you the tax levy breakdown between the third draft from July and then what it is currently for the final draft that we would be asking for approval tonight. The tax levy increase between 23-24 and 24-25 was $3.1 million. This includes the $900,000 increase offset by the school levy credit, and then an estimated $1.4 million increase offset by the net new construction. The tax rate does decrease this year to $8.90, and last year was $8.97, and this is because of the property value increase. This is the breakdown between municipalities within the district. And then a little bit about the communication of the tax levy. So there was a 7.5% property tax levy increase, but it's not a net change in the property tax levy. There are school levy credits that offset a portion of the school district tax levy. For the 24-25 school year, the state of Wisconsin has increased the tax credit in the district by approximately $900,000. New properties built in 2023 are taxed for the first time in 2025, and this shifts the school property taxes between properties. The estimate for net new construction this year is an increase of 3.9% within the district. The school district is made up of 7 different municipalities, and school property tax levy shifts between municipalities depending on the equalized property value changes. And then properties can have a tax value increase or decrease based on property changes. So if you did a home remodel or you had a reassessment, that could change your school taxes.
Allie, I don't want to interrupt, but I have just a question while we're here.
Mm-hmm.
When you say the estimate of new construction is increased by 3.49, is that what is on the tax rolls?
Yeah, so in August, we get an estimate of what the actual net new construction would be for the district, so that's what we were told it would be. I don't know, when do we get the final number at some point?
So the challenge with that number is it is shared with municipalities by municipality boundaries, not school boundaries. So as an example, Middleton, the city of Middleton has net new construction.
This is all.
But it's all, and it's not divided up by Waunakee School District. So as Ally mentioned, our financial advisor helps us create an estimate of what they believe this would be for properties that reside within the Waunakee Community School District. And they're normally very close. Sometimes the estimate is a little bit low. The reason why it's a little bit low is a lot of the new construction in the city of Middleton happens to be in Bishop's Bay, and Bishop's Bay is in our district, not Middleton. So if anything, this estimate is coming a little bit low than what the actual reality of it is. But the positive of that number is that 3.5% of a levy increase is estimated to be picked up by new properties taxed for the first time on January 1st.
So this number is new homes that are on the tax rolls
As of January 1st, 25.
as of January 1st. Okay.
Yeah, and then would absorb the 7.5%
Correct,
increase.
yeah, okay, I get it.
We did provide the tax levy by municipality breakdown and then also a tax levy explanation memo in board book. We would be recommending approval of the following tax levy coming in at $44,823,271. And then off to the right, we do just show total expenditures, not including Fund 73. I think at this point, we would be looking for approval of the tax levy and
Motion to approve as presented.
Second?
Any questions on either the budget adoption or the tax levy? If not, all in favor say aye.
Aye.
Opposed say no. Thank you.
okay, and then I'll turn it over to Steve for next steps.
So what I wanted to share with the board this evening is take a couple minutes, is talk about the next steps really in our budget process, which seems to basically be year-round, even though this meeting is the conclusion of the formal process for 24-25. We wanted to give a high-level overview of what we're going to be talking about with the budget committee in the near future. The next meeting is on November 6th, and the first bullet point that we want to talk about is a reminder that the November 22 capital referendum has had 2 borrowings so far, but there's approximately either 1 or 2 borrowings remaining, depending on feedback from the board. You do see we have a comma at the end of that saying, including discussion of allocating project savings to the tax levy or the borrowing. We did mention that Ally and I have asked our financial advisor to bring ideas to the board about possible options to take some of the project savings and allocate them back to either the tax levy or the borrowing itself. So that'll be part of the discussion with the budget committee. We do want to have a discussion with the budget committee on financial commitments not budgeted in 24-25. These were discussions that we had last summer and also in the spring, and they remain issues for us to have to work through today. You do see under that things like post-employment benefits, staff changes that occur after our budget posting in October, summer benefit increases for school year employees, termination benefits, which would be benefits owed to an individual who would retire or resign, and then maintenance costs in Fund 10. We want to have a discussion on some of the assumptions in the 24-25 budget, like interest earnings, special ed categorical aid, federal Medicaid funding, and then discussion on 24-25 end of the year balance. Ally and I would like to engage this discussion with the budget committee near the front end of this process, so we can establish some goals with where we want to be at the end of the year, and then talk through strategies to get there. And Ally, if you want to go to the next slide, please. And then as we move into 25-26, we will certainly be evaluating the referendum results from November 5th. We will be continuing the discussion on financial commitments not budgeted in 24-25. We're going to engage the budget committee on a discussion on the fund balance policy. We would like to engage the committee on the discussion on the district's contingency budget. We would like to discuss some of the practices that have been in place for the recent past that may need reconsideration. That would reference state grants and building and department fees. And then we would like to discuss the Inflation Reduction Act revenues, which will be starting to come in 25-26 for both heritage and intermediate school. We have scheduled a 90-minute meeting for the next budget committee meeting, so we're going to start really diving into these topics in greater length at the next meeting. but I just wanted all of the board members to have a little bit of a preview of those conversations that are being going on budgetarily. Probably the first thing the board will see as a group will be some recommendation coming from the budget committee on the next steps in the borrowing for the November 22 referendum. That may come as early as the December board meeting, depending on the feedback that we receive. So just be aware that that will be coming in the near future. And then Ally and I really want to engage with the committee on a proactive basis about where do we want to be in 24-25 and how do we want to start engaging our 25-26 planning. We are definitely getting to the point where you see under 25-26, I'll just point out one example, post-employment benefits. So for many years, we paid ahead on post-employment benefits, so the budget committee knows that there is a account within Fund 73 that we've been able to draw down to make those payments. We still have funds remaining in that account, but within the next year to year and a half budgetarily, we will need to introduce that back into our budget as an ongoing expense. So that's just one example of one of the budget changes that we're going to have to make over the next couple of years, is to get some of these expenditures built back in on the front end of our budget process. So the budget committee will be busy. Got quite a few topics to tackle, but we just wanted to cover that at a high level so the board knows what we're going to be working on over the next couple of months.
Thank you. Any questions for Steve? So we have concluded everything. So I need a motion to adjourn.
So moved.
Second.
All in favor, say aye.
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 Thank you.
Thank you.
Well, that was fun.